The news day continues here on One News Now. I'm Danny Laurel. Headline inflation accelerated even further to 8.7% year-on-year in the month of January. That is from the 8.1% logged in December of 2022. The January print is the highest annual inflation rate recorded in more than 14 years or since November of 2008. This is also higher than the Bangko Central's forecast range of 7.5% to 8.3%. The PSA says the main driver in the uptrend of inflation was the faster year-on-year increase in the housing, water, electricity, gas, and other fuels indices. Food inflation also climbed with upticks recorded for vegetables, flour, fish, and milk baskets. Core inflation also quickened to 7.4% from 6.9% in December of 2022. Developers of the $11 billion Sangli Point International Airport have signed the development agreement with the Cavite provincial government. With the signing of the deal, the group is ready to start the necessary work to implement the infrastructure project. The SPIA consortium, which received the notice of award, consists of the Yochenko Group, Cavitex Holdings, and Lucio Tan-owned Macro Asia Corporation, along with foreign partners. The airport will be redeveloped to become an alternative gateway to ease congestion at the Ninoy Aquino International Airport. The Sangli Airport is designed to meet an anticipated increase in demand for air transport in the next 30 to 40 years. Risk on sentiment driving our equities to bullish territory, but caution still keeps a tight leash on resistance levels. Here to discuss how to trade these markets, we have with us Ron Acoba, founder and chief investment strategist over at Trading Edge. Good morning, Ron. Welcome back.
Hi, Dan. Thank you for having me.
Ron, inflation 8.7%. I mean, shocking numbers here. At least, I don't know if anything shocking anymore, but nevertheless, tell us, was this in any way priced in? We see the markets reacting. I mean, we don't know if it's reacting to this inflation print, but nevertheless, it's at 6,800 levels. Give us your take here and how this might affect trading today.
Well, inflation both in the U.S. and here remains to be one of the major hurdles, if not the major hurdles for economic growth and market recovery. In the U.S., for example, while inflation in the U.S. have improved significantly to 6.5% from its 9.1% high back in June, it remains to be way past its 2 to 4% target band of the central bank. In the Philippines, however, the same cannot be said. As you've mentioned, its domestic inflation has quickened to 8.7%, blowing past market consensus of 7.7% due to increases in housing, gas, electricity, and food prices. Anecdotally, though, the silver lining is anecdotally, at least from that perspective, is that at least on the food prices end, which contributed about 30% to the recent hike in inflation, appears to be tapering. I remember correctly when I visited the grocery, for example, back in January, seeing onions selling for 700 pesos per kilo. Now it's back to 150. So that's the silver lining, and same goes with other food items. So hopefully down the road, with last year's high base and tapering food prices, we can see inflation finally cooling down. In the meantime, however, the BSP has to keep its monetary policy tight to keep inflation in check.
Okay, is there a risk now that the BSP might tighten more than what they've said, which is two hikes of 25 bips? Yeah.
I think, for me, in my point of view, there's a risk. In fact, I believe that they have to. Because last year, one of the main reasons why, for example, the peso depreciated notably against the US dollar is their reluctance to hike aggressively, even in the face of increasing inflation. Now it's quite evident that inflation is showing no signs of cooling down. So they have to actually be in front of the curve, perhaps hike aggressively by 0.5 in one go rather than in tranches of 25 bps.
Very interesting, no? And even as they said already just yesterday that they expect inflation had already peaked on December. They expected that, they don't need to keep in step with the Fed if that is the case. But as you mentioned, it might be a must here. Tell us, Ron, no, what are the charts telling you in terms of how cautious people still are? Because you can see, from the beginnings of the year, we seem to have this momentum of bullishness, and then it reaches 7,000, and then biglang nagpa-profit taking. What is going on here? What's in the mind of people?
Technically, from a technical perspective, the PSEI, as you've mentioned, profit-taking activities occurred right upon when the index hit the 7,000 level. At that level, the index is trading right at its downtrend resistance line that connects its peaks since 2018. So at around 7,000, we can obviously expect some degree of selling pressure and hence choppy trading in the very near term.
Okay.
On the positive end, over in the mid run, looking at months ahead, its ability to pivot off of a notable base and improving market breadth among not just index names but even second liners, both locally and even in the US, it appears that, at least technically speaking, prices appears to be basing in a very constructive way, which supports a possible upside break later on. In the meantime, though, we can see some choppy trading because of these headwinds that we see.
Okay, how do we trade these kinds of markets? When to be entering? Is now the time to enter? You mentioned, at least if you're looking a bit more long term. Now with the headwinds of inflation back on the table, we thought that was past us. How do we trade these markets? Are people going to be even more cautious in the short term?
In the short term, obviously, people are trading cautiously. Hence, they're selling out once the index jumps to around the 7,000 level. But if your time frame is, say, 6 months or 12 months down the road, with the assumption that inflation would start to improve, and the assumption that, for example, the Fed would not hike aggressively as it did last year, then yes, any weakness would be a nice window to pick up names. For example, the banking sector,
okay,
consumer sector, the property sector are all good sectors to go into.
Are we still cheap when it comes to valuation of the PE compared to other markets?
No, I think if I remember correctly, even at present level of around 6.8, we're trading at around 20 times PE, which is, if not the highest, the second highest in the region, which is trading at around 14 times PE. So from a PE point of view, we're not exactly cheap, but from DCF, in terms of DCF with regards to companies, we're trading at say 15% discount relative to its consensus target price of around 7.8.
Okay. So fundamentally there, but comparatively not exactly cheap. Ron, a lot of strands coming out today. First of all, to report, of course, to our viewers here, let's take a look at Accellum. This, as Metro Pacific has said, that their unit, which is Metro Pacific Agro Ventures, is buying 34.76% stake in Accellum. They, of course, they did an IPO a few years back, and they're doing coconut products, and this is part of the venture of MPIC on that. But the consideration is 5.32 billion pesos. Give us your insights here, especially as we see the stock price. I mean, it actually went lower now. I'm surprised that there's no trading halt happening. Give us your thoughts.
Well, my insight is, first, on the MPI side, it appears that they are actually being aggressive into diving into different sectors, different kinds of services, different products. Previously, MPI dive into back into the real estate sector by buying out Landco Pacific. Now they're jumping into the agribusiness sector, buying 30+% of Accellum. So MPI is really looking into industries that is not really government regulated, where it has been in the past several decades. So that's that. On the Axelum or trading side, what's interesting for me is that you've mentioned there's no trading halt, given the fact that this is such a major announcement of, yeah, and the
Does
fact
that happen,
Axelum
Ron?
was
Is this something that could happen, that no trading halt happens?
I have no idea. They should.
Okay.
I mean, at any moment now, it could be that that the BSP may require Axelum to be halted, but so far it's still going. But what's interesting for me is that Axelum was up significantly.
Before
Several
this came
days,
out.
even a couple of weeks before this notable announcement has taken place. So that's that.
So more interesting to be looking at there. We do see this, bar here on Feb 2, which was days
Yeah.
before, like you mentioned, a lot of
Yeah.
trading going on there. Nevertheless, Axelum down this morning to 3 pesos and 44 centavos. Other issues here, we have, of course, telco industry, and we do have Globe Telecom coming out with their earnings. Let's see if I can actually get that out here. It just broke in. Here we go. 2022 net income 34.6 billion pesos, up 46% year-on-year. Revenues up 4% year-on-year to 158 billion pesos. But the interesting thing is that they're cutting their capex for 2023 by 30% to $1.3 billion. What does this tell you about the company? A good year last year? Is this above what you were expecting? And how does it color this year?
Well, it's more in line to what we are expecting for the telco sector in general. As you know, the telco space is one of the major beneficiaries of the pandemic, with household and individuals, a number of them subscribing to data services. So, which actually provided bulk of the increase in the bottom line of all of the telco companies. With a 30% decline in capex for the present year, it only shows that the company is taking a more conservative approach in its investment. Basically, diba, if you're seeing growth, you would want to spend on those growth. But
Okay.
since you are cutting down on the capex, you're seeing basically not as significant as what you had in the prior year.
How would you compare this, of course, to the issue that was, let's say, hounding PLDT in terms of budget overspending, with Globe cutting the spending this year? How do we compare these two companies?
PLDT's issue is isolated on itself. But yeah, spending over in terms of capex is a major part of their business in terms of trying to exert or squeeze out growth out of those billions that they plan to spend. But since they're not really aggressive in doing so for the present year, meaning perhaps for example the household segment perhaps may have been saturated already. In my perspective, the only growth that they could see would come from the commercial end, with business activities going back to pre-pandemic levels.
Okay, time to enter the telcos, Ron. At this, since it's
For dividends, yes, but for growth, not really.
Okay, thank you so much. Great insights there, Ron Acoba of Trading Edge.
Thank you, Dan.
For more updates, visit News 5, the Philippine Star, and Business World Online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.